Long-term interest rates in Japan are soaring, and people are trying to find reasons for that. Maybe we have an imminent collapse, or maybe the debt is untenable. So, what's really going on? And this is what we're going to be discussing today, since Japan is one of the most important pillars outside of the United States, if not the most important, for distributing dollars and also liquidity, which affects, of course, Bitcoin prices as well. But more important than that, the whole bond market depends on Japan. So let's dive right in. So first off, what is really catching everybody's attention is the 30-year and the 40-year yields in Japan. So you see here clearly how it's been on an uptrend, but especially lately. So we see a lot of volatility, which is completely abnormal if you follow Japanese markets. They are not supposed to look like this at all. But here we are. So what's going on here? So first off, we need to understand that Japan has already structured itself as a carry trade kind of country. So what that means is we have a weak yen and a strong dollar, and banks normally traditionally Japanese banks and entities or even non-banks are able to take advantage of that, creating an arbitrage or leverage play on that, where they use their bartered yen to get exposed in especially US markets like the stock market or even Bitcoin, for the matter. But here we do it comes with the help of the Bank of Japan, because Bank of Japan really had a lot of yield curve control, meaning they buy their own debt. They have more than half their own debt on their balance sheets. But the idea, at least on the BOJ, would be to change that dynamic, saying that we are currently on a normalization of the Japanese economy. So when you see the like the Fed funds rate, but for Japan, so the standard interest rates in Japan, we had for many years just negative interest rates, as you can see here. And after February of last year, they started raising rates until they gave up completely on negative interest rates. And now we have the strategy of the BOJ to just keep raising those rates, because we are going back to normal. This is a dream come true of a central banker, where we say, look, we expect higher inflation because things are going well. Wages are actually going up in Japan, and we have the expectation of inflation, which is pretty great because we did have a lot of deflation after all. But reality is just knocking on the door, showing that is not really what's happening, since the rest of the world is not picking up any speed in the economy, and demand is just falling. Not only that, we had the whole tariff story with Trump. We do have a video about that. You can check on the channel as well, where we discussed about that. So everything just creates more and more headwinds onto that narrative. The question is, when are they going to change stances and maybe pivot again? They're actually trying to get out of the zero as far as much as possible, but they just cannot, based on the fundamentals, since they are on a spot where they have to choose between their own currency or the debt, but they cannot save both. And this is truly the problem, because the way that the monetary system is set right now requires Japan to have zero interest rates or negative interest rates, and have a weaker yen. So it's a pretty tricky situation, because there is really nothing they can do except for getting back to controlling their own curve and start buying. And because they're out of the way on buying those their own bonds, we don't see any buyers, because right now we see mostly Japanese banks or insurance companies and so forth getting rid of those, because this is long-term paper. So why would you hold a 40-year yield on Japan's debt if you expect them to keep raising those rates? So if you expect them to just go ahead and keep going because everything is going normal, even though you see it's not, look, let me get out of this. Let me wait until they decide what they're actually going to do. And as soon as it stabilizes, maybe I'll come back and buy it if I have any help from the BOJ. So, see, it's a very tricky situation. But the problem is, the more those interest rates go up, the more the debt actually goes up, and this will require more and more intervention afterwards, either right now or later on a greater scale. So it's a very, very tricky situation. And of course, that affects a lot of liquidity. And you may be asking, so what can I actually do with my investments? So how does that affect Bitcoin? How does that affect fundamentals and the markets? And this is why we have our Bitcoin intelligence report. So our latest one is number 20, which is absolutely amazing. You can have a look. Many charts for you on Bitcoin and monetary mechanics, as I do it myself. You can check the video on the article on the description below. So the other side of the coin is the yen. So the yen is currently on a very interesting scenario, because normally what you see is, as soon as you have those interest rates going up in Japan, you would see maybe an unwinding of the carry trade, where you get your investments out of the US and bring them back to Japan, because right now your cost of getting that yen is just going up and up and up, right? But it's not really what we're seeing, because normally when that happens, you see the yen getting stronger against the dollar, where this graph here, this chart would show them falling, which did happen for a while. But right now we have actually the opposite happening. So the dollar is strengthening against the yen, and we also see DXY going up. So the dollar is getting stronger, not only against everybody else a little bit, right, but also especially on the yen itself, which is a big part of DXY. So this is why both are very correlated. So this here, I would pay a lot of attention here, because this is like the world, the worst of the worlds, because this means inflation for Japan, since everything in Japan, like most goods are just imported. And this affects the quality of life, and this also affects the economy, creating the whole impression that, oh, you know what, inflation is back, maybe because the economy is doing great. So this is the huge problem that we have with central banking, when they just look at numbers like inflation, for example, and they take these kinds of measures. So you have always like antibiotics against viruses, so to speak. So that's kind of an analogy that I would like to leave you with. And what makes it things even more complicated is that if we see what is actually happening to Japanese inflation, you see that it's actually retracing. So since 2025, of course, that it does not mean that prices are coming down, but it just means that inflation is down. So the rate of which prices are going up is slowing. And this is in tune with what's happening in China, with what's happening in the US, with what's happening in Europe. So you see a deflationary movement, a synchronized deflationary movement that is happening across the world. And this is also interesting to see that we are in a post-tariff world, right? This also corroborates how tariffs are not inflationary, but are shifting the behavior of consumers to just try to hoard more and not buy and not make that buying decision, which it creates a lot of problems, because Japan at this very moment is facing the whole tariff situation in the United States, where they have many models of cars that are exported to the United States, and now with a tariff. So they need to slash more prices in order to absorb those tariffs, to make sure that these cars get to the U.S. So it's which of course creates a lot of pressure towards Japanese workers, which is just create that whole spiral. So how can you go back to that whole narrative and say, look, Japan is actually doing great, so let's raise more interest rates? So it's a huge problem. So you don't want to interfere. You don't want to buy your own bonds. You keep the narrative that everything's going fine, and banks are not buying it. So that's why we are left with this. So we are left with interest rates, especially the 30-year, the 40-year, of people just saying, look, there are absolutely no buyers unless the premium, the risk premium, or the term premium, as we call it, is raised. So this is why you see those rates coming up. But another factor there is that we are 4 days away when you see this video from Japanese elections, and we also have yen traders on option bets on what's going to happen from now on in the middle of a tariff negotiation, which should be easy because Japan and the US should be pretty close allies. And you have this whole tension with a catastrophic negotiation round between the US and Japan about tariffs. So you have a sum of all of that. So you put all of that together, you have a recipe for disaster. I mean, but does that mean the Japanese economy is just going to collapse next week? No, not at all. But you see what kind of difficult of a situation it is when you try to do everything at the same time. But unfortunately, Japan is very limited in the amount of things that they can do. So let's see what happens from now on, especially after the elections and the expectations. So I would have a look at those yields in Japan, because Japan may be shifting towards more stimulus, and maybe they try to unwind the whole narrative and normalization. And if they do, this is favorable to Bitcoin. This is favorable to liquidity. And we have already a ton of those provided by the US, by China, and the whole market situation. And this could be yet another one. So let's see what happens. And I hope this helps. See you in the next video.